Good morning. It's my pleasure to introduce our next panel. To my immediate left, Eric Lombard, Director General of France's Caisse des Dépôts, and architect of the proposed merger of CNP Assurance and Banque Postale. And next to him is Gilles Grapinet, Director General of Worldline, a provider of electronic payment services across Europe. We have Wim Mijs, Chief Executive of the European Banking Association. And last but certainly not least, we have Giles Andrews, co-founder of P2P lender Zopa. Now we're here to talk about building European financial services champions. European fintechs, according to reports, are 2 times more valuable than any other tech sector, startups in any other tech sector in Europe. The sector receives 20% of all venture capital in Europe, a higher percentage than is invested in fintech in either the US or Asia. And after big successes in payments, we now have many rising stars across nearly every aspect of fintech in Europe. Open banking and PSD2 have enabled the rise of European challenger banks and middleware data players, and we now have a number of them, including Revolut, N26, and Monzo, and Go Cardless, that are expanding out from Europe into the US. So this is all really good news, but can we do more to build not just European, but global financial services companies? And what are the barriers to doing so? So let me start with you, Eric. What do you see as the impediments to building more global champions in financial services out of Europe?
Actually, for me, it's a kind of mystery, because we have in Europe one of the biggest savings pool in any global economy. And you mentioned the fact that Caisse des Dépôts is getting closer to La Poste. We will have a total balance sheet footings of 1.2 trillion euro, which means a capacity to invest which is huge. And I believe one of the difficulties is the following. When you speak about fintech, you are generally with private companies, which is a big difference. When you speak about public companies, you can build a position, you can buy, you can have majority, you can have an anchor. When you deal with a private company, the decision on who holds the capital is made actually by the founder, by the manager of the company. And so the point we have, as we have the capacity to invest in Europe easily, there are really funds available, is to make sure we convince the promoters, the innovators, that their future lies in Europe, on the development of the European market, more than in the US. Because the point is, many of the fintech, many of the startups decide to change shareholder and to set themselves to American companies before they grow. And so how can we reverse that move and make that they grow in Europe before they sell to non-European companies?
So if I understand you correctly, one of the major barriers to this in the past, which was access to growth capital, has now been removed. So there is no reason for founders to go to the US just to raise capital.
When we say this barrier is removed, probably I'm a bit optimistic. But the truth is there are a lot of funds available. If you look only at the French market, billions have been leveraged last year in 2019, available for fintech, for deep tech, for a lot of areas of the economic development where those funds are readily available. So one of the difficulties, it's probably a marketing issue, is to make sure that this information gets to innovators. That's why I'm very happy to be here and to pass the message to all of you in the room. That is one of the impediments. The other one is to convince them that the European market is open and easily accessible, or in relative terms, that the American market, and I'm a great, I mean, the US is a great country, of course, but it's not such an easy market. So if fintechs want to develop rapidly, I think really there is a possibility that they have to try first on the European market.
Okay, thank you. So let me turn to you, Gilles. You have a point of view on how easy or difficult it is for fintechs to expand across Europe.
Yeah, sure. As a matter of fact, I'm speaking from our own experience as Worldline. We are the largest European payment services provider. So for you to understand where we play, we are a very strong processing company for banks. We support banks for whatever they need to do in payments on one hand. More than 330 banks across Europe are customers of us, or actually operating on our platforms, and 500,000 merchants that we operate as commercial acquirers or acceptance providers online or for mobile payment schemes. My point here is for fintechs and startups, you have fundamentally two categories. They were the ones that were going direct to their consumers, the end consumers, whether for proposing savings, credit, or whatever other financial products. And they were the ones that have been built and grown to actually sell services to banks or to merchants in various fields of play. And there comes the complexity for them. Everything is fragmented in the European finance industry. Everything. Not only the startups and the fintechs, the banks first. There are 6,000 banking licenses in Europe. If you want to sell services to banks as a startup, you look at a gigantic pool of 6,000 banks that you need to penetrate, to discuss, to find the contact points, to have the sales channels established, to create your reputation, being said that there are hundreds and thousands of startups trying to do the same. Then you have, of course, the merchant and the retailer's ecosystem, which is as complex, if not more, and real tough cookies when it comes to contract and negotiation. And then you have the different regulations, different payment brands operated in various countries. So as a startup, let's face the truth. Europe is a complex and still halfway consolidated continent for the finance industry. And my point is that companies like Worldline, which are themselves scaling at a pan-European scale, is really a good news for startup and fintech. Because first, we look at them as partners, genuinely, and this is a love declaration to startup and fintechs. Come and knock to the door of Worldline. We know how to work with startup and fintechs and to bring you to our own customers. What you do most of the time, we are not going to do. We are not in competition mode. Payment is an ecosystem. We know how to work with people in our industry. We did that for decades. And so the good news for startup and fintechs is there are companies like ourselves scaling, easing their own route and access to 100 banks and 100,000 merchants. And so for me, really, this is one of the important messages. Whatever happens in the European finance industry consolidation is good news for startup and fintech. It will ease their own development.
Great, thank you. So Wim, you have a pan-European point of view. Tell us what you think.
Actually, to be honest, of all the panels, I found this one had the most difficult title, because building European champions in the finance industry, that's maybe part of the problem. We are not building European champions. We should enable the environment in which the entrepreneurship creates European champions. So I'm passionate about the idea that there would be a really great fintech European champion, that is the next way forward. But indeed, as my colleague said, the European market is fragmented. The question that we need to ask ourselves is indeed, why do fintechs, when the moment they hit 20 million turnover, move to the United States? And partly it has to do with lack of capital market, not because the lack of capital, because there is plenty capital, as Eric just said, it is available, but indeed this capital is either available through banks, but also if you look in the retirement provision, there's a lot of collective retirement provision, and maybe there's a culture, less of an equity culture in Europe, where people invest easily in equity in startups. And that's logical because there's a risk involved. But we need to unleash that capital, and that, I must say, should be aligned with the plans of the new European Commission to update and make more accessible the capital markets in Europe. So that's the first. The second question is, Fragmentation. If you listen to all the fintechs that are here, they're all built on a national idea, on a national basis. They know their national market. They come up with a great idea. It is a success. It's a success at a national level. And then they all say the same, now I need scale, and the only way to scale is to go abroad in Europe. And then they run into a strange phenomenon, because on paper our European market is unified. We have a general data protection regulation, which is unified. Nevertheless, if you look at data transfer, all the local data protection authorities have a different interpretation. And you can go on and on with all the different payments. Service Directive is a great potential innovator, interpreted by everybody in a slightly different way. And this is very difficult, so that we need to try to be not only on paper one market, but also in reality, and that is what we need to work on. And the third is that if you look at the United States, as was said when we discussed this before, yes, the United States is also difficult to deal with 50 or 52 states. But if you go to California, then you have a state that is rich and large, so there you can have scale in one state only. So there are 3 levels, and the final one is, well, sometimes in Europe I find that I find it easier to talk about problems than about opportunities. So maybe talk about opportunities. The glass of Mr. Lombard, in my view, is half full.
Okay, thank you. And so now let's turn to the entrepreneur and talk about, what were some of the barriers that you confronted when you launched your company, and how did you overcome them?
So before I answer that question, talking about capital, so Zopa's just raised £140 million to launch its new bank, and we raised it from an American investor, I'm afraid to say. And the reasons why you pick an investor are very complicated, but we found that was more appealing to us. And that doesn't mean we're going to America. It's an American investor wanting to invest in a UK business. In terms of challenges in building a fintech business, I think it depends at a number of different levels, but if we cast our mind back to 2005 when we launched Zopa, we were doing something that was radically new. We were the first people to do this in the world, and we were encouraging people to trust us with their investments and lend money to strangers on the internet and get it back with a return. That's kind of a radical proposition. So there was a huge challenge in building trust, and we were a bunch of very optimistic entrepreneurs. And the building of trust was hard. I think if you look, we got there in the end, but it took a while, 15 years. But if you look today at some of the businesses that have grown faster, they're actually, the proposition is not asking people to do something different. It's asking people to trust a new company with a service that they understand better. But I think the point remains that for anyone to build a business dealing with particularly consumers' money, building of trust is the biggest hurdle and the biggest opportunity. Once you've got trust, it's incredibly valuable.
So let me throw this question out to anyone in the panel who wants to answer. Does Europe have an advantage there in the sense that, we were out front with the GDPR, which others are now copying, and, data privacy and transparency are core European values. So is that something that fintechs here can play on to become a success globally?
Well, ethical use of data is going to be essential if we're going to an environment, because the word trust was mentioned. In my view, people still trust their banks with their data. And this is incredibly important, and also incredibly important for a credible fintech that uses consumers' money. So the whole idea to set a benchmark for the ethical use of data and data transfers makes perfect sense. The issue is, it was a regulation, but it should be applied in every country in the same way. And what I see stopping is that scaled-up fintechs who are working in multiple countries find difficulty in exchanging data. So the idea is great, the idea is important, but the application is not right.
Yes, I think it's a very, very important question. Let me give you an example. At La Poste, a subsidiary of La Poste called DocaPost is developing and has been the first to have approved digital ID, which is totally secured, because it's a blend of technology, but also the fact that the ID is checked by a postman in a post office. So that is, and the fact that it is done by La Poste, which is public company but based in France and known by everyone, of course, comes as a security for people who are using it. And it's true that there is always a doubt with the GAFA, however powerful they are, and because they are so powerful, about what they do with the data. And it's sure that the importance given recently to privacy through RGPD and all the problems behind that are a competitive advantage, in my view, for companies based in Europe. Because in Europe, it is absolutely critical to protect the people. Because that's in our DNA, that is how Europe has been built, and we certainly can leverage on that as a competitive advantage to develop businesses throughout Europe.
Well, Jennifer, this is really a great one. Really, I genuinely mean it. I mean, this question is sometimes totally missed when we talk about global perspectives. If I talk about payment, I'm a bit obsessed by payment. Sorry for that. Breathing payment, dreaming payment. So just is what I do for a living. But if I look at payments, but which I can expand to the finance industry at large, if you can scale a business at the European size in Europe, you are in the most demanding continent to operate a successful business by any means. Margins are smaller than in the US, in Asia, in India. Big time. Big time. Due to the cap on the interchange regulation, for the one familiar with the industry, banks and merchants need to operate at thinner margins, and payment service providers are much thinner margins than anywhere else. Regulation is more demanding. Big time. GDPR, but not only. PSD2, Payment Service Directive, number 1. Number 2, it is also for money, for lending money, we have very tough limits at the rates at which you can lend money in most of the countries, which are much below what you can have in other countries for money lending companies. If you look at MiFID II and all what's related to saving management, the level of transparency, education of your customers, KYC you need to put in place, it is the highest standard in the world. My point is, if we make European champions, they will be global champions. It will be finger in the nose. Because I can hardly see any other continent which has put so many standards at the level they are in Europe. Our only problem is to scale.
So if you can make it here, you can make it anywhere. That's what you're saying. Yeah, okay.
Big time.
But I also think that the point around the global technology companies, the huge technology companies, have given Europe an opportunity which didn't perhaps exist 3 or 4 years ago. So the mistakes they've made and the erosion of trust in them as holders of data, I think is significant. And I personally, private view, think will get worse. So I think that the threat big tech presents is perhaps less than we feared 2 years ago. It's not gone away, but I think Europe has perhaps a greater opportunity now than it did 2 years ago.
Yes, and I would agree with you there. And when Eric was talking, it made me think of something I saw at a conference, a tech conference 2 weeks ago, and they were talking about postal workers opening letters and before delivering them and saying, oh yes, we need to read these so that we can serve our customers better. And the joke was, well, this is exactly what GAFA is doing, but people are now starting to realize that, that's what's happening, and they're not too happy about it. So yeah.
I can testify that first, postmen don't do it, and second, they could not do it because it's obviously automated, because the post office are distributing millions of letters and so on and so forth. So happened a long time ago, unfortunately, but I think that's the past.
Yeah.
But 2 important aspects that are coming forward. The first is indeed, thanks to the behavior of the GAFAs, they are losing trust. People may like them, but they don't trust them. And there's also a fundamental difference. Traditionally, banks get data to do the transaction. So data collection analysis is not the core business of a bank. Whereas a GAFA, data collection and analysis is the business model. And people are starting to realize that. So I agree, this is a window of opportunity. On the other hand, if we mess up and lose that trust as a financial sector, then we are really at the end of the end. But the other point was this identification through the postal office. What I find very difficult, what is essential for me, is that you make the whole customer journey digital and easy, including identification. And this is where public-private partnerships work, indeed like the postal office, which are generally have a high level of trust. So if you can identify and open an account and do your business and come in a closed environment by testing or using or testing on public databases, that will enable the system. It will be good for money laundering, it will be good for safety, it will be good for cybersecurity, so that needs to happen more. And in many countries this is happening. This example that Erik gave was a clear example, and there are other good examples, and there are also incredibly bad examples. There are examples where local authorities absolutely refuse to cooperate with any other private company. And that does not mean, in my view, that private companies want access to public databases. They just want to test. I just want to know this passport, is it reported as stolen or not? And that needs to be done. And that is also important for trust in the system.
Okay, Erik.
But yes, trust is becoming more and more important. And, you know, at Caisse des Dépôts, on the logo, there's written a public face. So it is at the heart of the project. And to give an example, because we speak about FinTech, but I think it's important also for everyone to have in mind that also innovation comes from large groups. And large groups, and Marguerite Bérard, by the way, just illustrated that on the scene a while ago, are really motors of development and of change. And I want to give an example that put together technological development and trust, which is what we do with the blockchain. And with the blockchain technology developed at Caisse des Dépôts and with partners, we have put together 4 partners, La Poste, Caisse des Dépôts, with EDF, the electrical utility in France, and Engie, which is an energy utility, to make sure that the billing process can be secure and people can use their bills in order to have access to various services. So there are the physical networks of those entities and blockchain to secure the operations. And that goes with the trust that those entities, those companies are bearing in front of their public. And I think that's also a way which is very positive for the development in Europe. We need the trust of our people, and that can be leveraged.
So that's I think a great segue into the opportunities for big traditional companies to partner with the fintechs to move things forward. And Giles, maybe you want to talk a little bit about one of your portfolio companies.
So one of my companies is a company called Market Finance in the UK, which is a business that provides working capital finance to SMEs. And I think we've done probably the deepest integration between a fintech and a traditional financial services company. So we partner with Barclays, who've got about 1 million SME customers, and they don't have an invoice discount product for the vast majority of those customers. So they can deal with their top 1,000 companies, but the rest they can't. So they faced a difficult decision: do we build a product or do we partner? And I'm delighted that about a year ago they chose to partner with us and effectively offer our product. So it's not just a question of using our technology, they actually offer our products called Market Finance. In their call centers, their relationship managers offer this product. And it's increasingly becoming a very significant part of our business, and also increasingly important to them. So I think it's a really good example of where banks are making, I think, the enlightened decision. Do we spend 3 years building something, or do we go out and find the best in class and partner with it?
Thanks. And so, Gilles and Wim, I think you might also want to talk a little bit about how the whole sector has moved on from an era where the fintechs said we're going to crush all the banks and take over from them, and are now kind of thinking more about partnerships.
Yeah, for sure. I mean, this is, I think, one of the things which is making me very confident on the perspective of, let's say, the current generation of startups and fintechs. If we forget the buzz of 10, 15 years ago, where everyone was saying, I'm going to disrupt you, we need banking, but we don't need banks any longer, this type of sentence that were flying around. I think a type of age of maturity is coming. There are certainly a few disruptors, I don't deny that, and most probably if they are successful, it is they bring something useful. But most of the startup and fintechs we are working with came to the conclusion that they are part of an ecosystem and they need to find ways to actually bring their value proposition to legacy players and legacy players are interested to work with them. But they need, to a certain extent, to have someone in between that is going to help them to filter the good value proposition, to qualify the technology, to also qualify some of these startups and fintechs which are sometimes at early stages of their development. And if you are a bank, you don't want to spend an 18-month project to connect to a solution that may end up in the dustbin in 3 years' time because the next round of funding has not been found. And as Worldline, we have set up over the last 3-4 years a very intense industrial program, if I may say so. Don't take it the wrong way, it is ultra positive, which is how can we onboard, fast forward, startup and fintechs that are bringing complementary offers to our customers, that are going to be connected to our customers through our system. So it is about very stringent process of engaging, going to these type of forums, talking with fintechs, then talking to our customers, identifying where value proposition can match, organizing events like Hackathon, where we bring companies like Accor, BNP Paribas, ING, DZ Bank, or let's say OP Pohjola from Finland, in front of a bunch of fintechs to solve concrete operational business issues of banks or retailers or big organizations, using Worldline set of technologies, our APIs that are available to fintech to easily connect and then to industrialize their solution with us and bring them with us in sales engagement cycle. Typically, we were having the NRF in New York, the big retail trade fair, the most important in the world. Few fintechs came with us on our booth, and during 3 days, they've been exposed to top-notch retailers, taking advantage of our credibility that we give them because we have qualified them. This is, for me, really a way forward, which is working as an ecosystem and considering that everyone is bringing a brick to a wider value proposition.
Thank you. And Wim, are you seeing more of European banks partnering with fintechs?
I think it's brilliant. I already thought 5 years ago it was brilliant because, indeed, fintechs who were boasting, indeed, that they would replace banks had great ideas and had great working methods. The way they looked at problems are very different from if you are in a big matrix organization with a hierarchical structure. So they taught us a little bit to, they brought dynamics, they brought innovation, and but indeed, big companies can be innovative too. So it's indeed logical because the fintechs found out that they needed things that banks have in abundance, scale, with a close relationship with their customers, so they know their customer base, money, and patience. And with patience, I mean also the cross-border legal knowledge that is necessary, because if you want scale cross-border, we just talked about the obstacles. The bigger banks have the legal knowledge to see if they can work through them. So the cooperation is almost natural, and at the same time, customers are demanding, and they come from the retail side where they know everything is instant. They want to buy sports shoes, they buy them now, they get them delivered in a few hours. So they want quicker, faster, new ways to have service delivered. So it's actually a bond made in heaven. And in my view, this European champion that we would love to create might be some kind, one of the bigger banks that we already know, helped with fintech. And the only way where I really thought that the banking industry was outmaneuvered, and actually I love that, is where we did not have our business, or for whatever reason, we did not have our business up to date. So then we left a hole in which somebody jumped in. But I think this cooperation is really made in heaven.
Super interesting. So we talked about partnerships. We also talked about how trust and data privacy can be an edge for European financial services companies. Let's look also at PSD2. And you know, it's interesting because you would think, at least on paper, that it would be an advantage for fintechs in Europe to have legislation, pan-European legislation. There is no such legislation in the US, and yet we see Plaid, who kind of created the market, having a fantastic exit. And I'm not quite sure what that means, but I think it's interesting to note. And I'd like to talk about what are the opportunities for open banking. So let me start with you, Giles.
So I agree with you. I don't know what it means that Plaid was so successful in the US in a sort of without the environment necessarily being set up for them. But as a sector, I think it's really exciting. So I think open banking is a potential disruption to the plumbing. Big banks have held on to this idea they're going to control the plumbing, whatever. They may lose some bits at the front end, but they're going to hold on to the plumbing. And I think that that's up for grabs in a way that I didn't foresee 10 years ago. And I think it's open banking enabled. You've got some really exciting businesses like Tink, TrueLayer, not yet at the scale of Plaid, but doing really interesting work. And coming at it from a consumer point of view, what service do consumers want out of open banking, and what rails could best serve those services? I think it's a really interesting question.
Anyone else on the panel want to discuss?
Well, just a comment, which is sometimes we tend to, we are easy to blame also policymakers and regulators. Talking about advantages of Europe in the global world, let's look at the chance we have to edge such an innovative regulator on many fronts. PSD2, you mentioned, open banking is actually leading the edge of the world of finance. We are receiving ourselves at Worldline tons of Asian banks, Latin American banks that want to understand the way it works, including foreign regulators. So it is giving an advantage also to all our startups and fintechs to be ready there for such an advanced regulation, because it will go in other part of the world. Same with instant payment, instant credit transfer, the fact that you can move money between two banking accounts in less than 10 seconds will become the new normal in the entire globe. And guess who is actually today bidding in the US, in Latin America, in Asia Pacific, in the Middle East for the same type of instant payment implementation? European companies, big time, who are quite far away from our home base, but we have 5 years of advance versus most of the other players in these countries. So for me, more generally speaking, regulation can be also helping to raise the bar for European companies, whether they are banks, payment service providers, or tech companies, and be also ready to then follow up these trends when they become global. And it is good from that standpoint. Sometimes we don't voice it enough. We have quite an innovative regulation, not only innovative companies.
That's a very important point, because in the past, supervisors, regulators were trying to rein the development of the business, looking cautiously about what was new. What was new was probably risky, and knows that totally changed tack. And we've seen that a few years ago, and they decided, and that's particularly true in France with Banque de France and ECPR, the supervisor of financial industry, they decided to have teams to understand the way fintechs would work. And for instance, to give an example, in the insurance industry, Alan, which was one of the first to develop, began to work with ECPR in order to see how can we develop our businesses, but ECPR thought that their mission was to help their development, even from time to time against the legacy companies. And that is a way that will be very effective going forward, because that means that we will develop very strong businesses. If we can give another example, there is here today a fintech called Liquid Share that is working on post-trade. We are not in the payment industry, but on the stock market and on the bond market. And this startup, which is, in which case the Dépôts is a shareholder, is looking about how to improve the way post-market is working. And they're dealing, of course, with the traditional operators like ourselves, but also with the supervisors, with Banque de France, with ECPR. So this new way of developing business can be very powerful for Europe as a whole, if Europe, on the top of that, is trying to be coherent and to build European regulations that can supersede local regulation. Because it's true that when you have 27 regulation, even if I used to say that in the US, in the insurance, there are 50 regulations, so there are less in Europe, but still to have one regulation, of course, will be a competitive advantage for the industry.
Okay. Anybody else want to add to that?
Actually, almost everything has been said. Indeed, the way we saw PSD2, I would agree that this sets the world standard. Same with instant payments. Then I go back a little bit to my optimism, and the opportunity is there. But indeed, the fragmentation is also there. If I look at the way PSD2 is being implemented, I see differences across Europe. And that is a great pity, because there we lose the innovative capacity, there we lose the opportunity that we have to really take this and make this into something good.
So one of the things that, as a journalist, I've been looking at a lot lately is the development of super apps and the platform business model. And we are slowly starting to see a couple of banks in China and Russia trying to become platforms and offer not just financial products, but everything that their customers might need in future. And we're seeing a whole new breed of competitors cropping up that the banks are going to have to deal with. I thought it was super interesting that Singapore has just opened up 5 new full banking licenses, and one of the applicants is being led by a gaming company that has teamed up with a supermarket, an insurance company, and a used car online site. You know, not your father's bank. So, and to what extent do you see Europe's traditional banks being able to keep up with these kind of new platforms and create a super app platform of their own?
I'm a bit skeptical about the super app business. I mean, I think if you look at the fintech successes in the last 10, 15 years, they've typically been where a company has targeted a particular proposition and just done it really well. And delighted its customers, reduced friction, and provided a materially better service. I think that's really hard to do across a number of different sectors and different products. I personally don't believe that consumers want to buy everything from one place. I think, fine, if I want to buy something online, then Amazon's a very convenient place to buy a wide variety of stuff. But in financial products, I think people are quite comfortable having a number of different relationships. I may be proven wrong, but I think there is opportunity to partner. There is opportunity to combine things up to a limited point. But I think the winners will continue to be people who just do things really, really well.
I agree. And indeed, you actually market this very well. To team up with a used car dealer is always good, I think, for trust. But if you take this platform, and there are several aspects, and we talked a little bit about trust as well. Indeed, you don't mind. I go everywhere, but when I want to do the financial transaction, I go to a trusted financial environment, in my case, my bank, to pay for the transaction. And I'm absolutely happy if it goes quick and smoothly in a safe way. So I don't mind. My retailer doesn't have to offer me either the loan or the payments possibility. So I very much, if I agree with Charles, that we need the quality. Having said that, this platform banking is going to happen, and there are a few questions to be asked, especially for the supervisors, because we are now supervised and regulated as banking, as financial sector, and there are good reasons why we are so heavily supervised and regulated. If you blur the lines between others, between supermarkets, used car dealers, etc., then you need to ask if you should supervise the services or supervise the sector. And the same goes for big tech. If you take all the fintechs of some of the big techs and you follow the line, then you end up with a pretty big financial institution that is unsupervised and unregulated. So platform banking might be interesting and there might be possibilities, but I do agree that there are, from the customer trust, there are questions to be asked, but also from the supervisory and regulatory environment, you have to ask if this looks like a bank, feels like a bank, smells like a bank, you want to supervise it like a bank.
Yes. However, you can build a platform going from a traditional business. For instance, within Caisse de Dépôts, we are developing towards local public entities, social housing. I mean, all the clients of Caisse de Dépôts, a platform called Banque des Territoires. Yeah. And then people, and it's very successful with those entities, because people not only have access to the financial services we can render, that is equity investment, payments, lending, of course, which is a big activity for us. But also on this platform, they have access to startups that can bring services useful for them. For instance, where are the small businesses in a given city or given territory? What are the industrial development in that place? And so there is a blend between financial services that we provide and we host FinTech or startups or more traditional business that can also increase the interest of the services that are rendered. And of course, we guarantee that those services are of quality because it's all under a Caisse des Dépôts umbrella.
But that is not what I meant. I was very much into the supermarket teaming up with the used car dealer thing. For me is a very important point, and especially if you talk about organizations like Caisse des Dépôts, is the social function of banking. If you use the social function of your banking to expand and to enable financial inclusion for people that have problems getting a bank account, into social housing, doing offers into public, into energy companies, that is a different proposition from, I would say, non-bank entities who suddenly start offering banking services to pay more products. And there I say, fine, competition, fine, but supervision, also fine.
So if the big Silicon Valley tech companies move more and more into financial services, you're saying they should be regulated as banks?
Yeah, if they behave like banks and deliver banking service. And as guys, I can all invite you to the exercise. Go online and find of all the big techs, all the small fintechs delivering financial services, and then make a red line to the mothership. And what you see is a nice financial institution emerging. And that's fine, as long as it's supervised.
Okay.
Just a word on the development of platform business models and consumers ecosystem, which is of course a big trend everywhere in the world, but coming of course to Europe. I have just a few thoughts. They're again a bit biased by my payment angle. But I mean, let's imagine, you know, we are used now to have this type of consumer ecosystem. Let's say you buy an airline ticket and you see that you are proposed to rent a car when you get to the airport, like a partnership between an airline and one of the big rent-a-car companies, and then you can book your hotel or even the train ticket to go to downtown. Okay, you have 4 merchants, a few services, a couple of products, and you want to bundle that in one payment transaction. So guess what? Of course, on the front end, you want it to be absolutely frictionless. One payment. You don't want 4 payments for that. You want 1 payment. Then you need to manage the reality of the life, which is maybe you will need then to have a clearing and settlement system behind to distribute the value between the various participants securely. And what happens if you have a chargeback, one of the merchants not delivering what has been promised? How you manage then the discount on the bill and you make sure that it is trust, that there is trust, confidence, and everyone is comfortable? My point is very simple. Consumer ecosystem are going to grow. They need very strong, scaled, highly innovative payment services providers. And of course, the more you go beyond the marketplace concept and you want to aggregate physical shops with online value proposition, mobile apps or super app type of things, the more you will need ultra streamlined, industrialized payment services provider to make it real.
So beyond what we have already discussed, which new technologies and new business models do you think will drive innovation in Europe's financial sector going forward? Who wants to take a stab at that?
All secure token stuff, the whole crypto stuff that's really the next model, in my view. There's a lot of work going on. Also, I think in Caisse Dépôts, they have labs, and Libra was interesting, because in my view, it was kind of a wake-up call for central banks as well, that the technology is there. I think that somewhere in the project, they kind of missed reaching out to central banks and doing their legal and regulatory stuff a little bit better, but the technology is there, and in my view, that will have an impact.
What's interesting there is that many governments, when looking at issuing a government-backed digital currency, are looking to partner with private companies to make it happen. So I think that's a good opportunity for fintech companies. But just let me go to Giles.
So I think I've covered it. I think the developments that come out of open banking will be really interesting. I'm not smart enough to know which way it's going to go, but I think giving consumers the power to dictate the way their money flows through the system, I think, is really interesting, and not being reliant on the way it's done, the way it's always been done, and the delays and speed, convenience, and the opportunities for it to be location specific. I don't just mean geographical location, but what are you doing? Why are you doing it? And how can the flow of funds facilitate what you're doing? I think is really interesting.
Thank you.
Just two lines on this one. The first one is, of course, let's already take advantage of what is currently being implemented. I mean, instant payment and PSD2. I mean, we have not really scratched the surface of what we can do with these new tools and new ways of interacting with the banking ecosystem. I just can tell that in the Netherlands, for example, we are currently operating 1.5 million instant payment a day on our platform on behalf of the Dutch banking community. I mean, let's imagine what it means. I mean, instant credit transfer. What can you do with that in the real life if you are a creative merchant, a creative startup, and how can you solve old problems with real time, which is what is at stake here. I'm sure that, I mean, we just need to go through this first route. We have invested a lot. The rails are ready. Let's really look at what we're going to do with it. My second point is, you know, looking at payment and finance, you have the fiat currency level, the euro, the dollar, or the attempt of the Libra to get there. That's not my stuff.
Let's not forget the pound.
I mean, okay. I mean, let's say this is the layer of the governments and the central banks. Then you have the payment brands layer, where you have, of course, Visa, Master, American Express, Carte Bancaire here in France, and tons of others, Alipay, WeChat Pay. Europe has a missing point here. We don't have any pan-European payment brand. We are still operated under national payment schemes. And you know, sometimes being late is an advantage. What type of payment brand of the 21st century could we build as European to actually support consumer ecosystem, platform business models, and thinking global from the start? I'm sure that there is an innovative stream here that has been untouched.
Thank you. And Eric, you have the last word.
Thank you very much. Then maybe we can bring together the first question and the last question. I believe blockchain can be a way to settle the issue we dealt with in the beginning. That is how to put together a big pool of investments, of savings, with private companies looking for investors. And blockchain can make easier the access to any type of investment, but all type of savers, through crowdfunding. And by the way, La Banque Postale is developing its own crowdfunding activities through a company called Caisse Bank. But I think that's very important for the future, because we complain, especially in France, that investors, savers don't take enough risk. We have to put together to them tools, ways, so that their savings is channeled to risk investments, but that can be, of course, very profitable for the economy and also for the yield of their savings.
Thank you. So with that, we're out of time, but just to sum up real quickly, the money's here, the regulations are here, the opportunities here. There are lots of reasons to be optimistic about building global European fintech champions. And with that, please give a nice round of applause for our panelists.